Work like an owner, build wealth like an owner, the unique benefits of ESOPs for companies, workers, and communities. So, what are the nuts and bolts of an ESOP? An ESOP enables employees to co own the company they work for. Individual employees accumulate shares in their retirement accounts over time, and they cash in those shares when they retire or leave. Yet, the stock they own never costs them a nickel. ESOPs go through an annual cycle. Step one is appraisal. The company is valued once a year. Step two is contribution. The company funds the ESOP often through a loan payment. Step three is allocation. Stock is distributed to employee accounts. And step four, you receive a statement detailing your account. Did you know that there are 40 ESOPs in the general freight trucking industry covering 20,579 participants? And IPS is the only ESOP in this category in the state of Kentucky. IPS has distributed over $8,049,924 to former employees from the ESOP plan. At the end of 2024, IPS has over $56,497,054 allocated in our ESOP accounts. All employees, whether you're the CEO or a fleet manager or a driver, participate on the same basis. So what does it actually mean to act like an owner? It means to live our values and our mission. When you act like an owner, not only do you help new employees act like owners, but you also become a beacon in our communities. Acting like an owner is part of our workplace culture. So why is that important? Well, it can be a win-win. Research shows engagement linked to business success. Business success helps employees build wealth. Engaging with other employees can improve work life and make work more pleasant. A positive workplace culture and employee engagement shows positive effects on key performance indicators within a company. Engaged workers are the lifeblood of their organizations. Work units in the top 25% of Gallup's database have significantly higher productivity, profitability, and customer ratings, less turnover and absenteeism, and fewer safety incidents than those in the bottom 25%. So, what else is so special about ESOPs? Well, ESOPs help retain local jobs instead of companies shutting down. That means those with jobs are spending more locally in the community. ESOP companies, by their nature, think more long term instead of just the next quarter. Research shows fewer layoffs as the first step, even during the pandemic. ESOP employees, in turn, are more likely to be in for the long haul. Research shows much lower voluntary turnover even during the pandemic. ESOPs are one of the few remaining ways that workers can build actual wealth over time. Unfortunately, many workers are not able to get ahead enough to be able to save for retirement, no matter how hard they work. In this table, the percentage of those who reported zero savings across wage categories and their median account balances are shown. As you can see, with salaries up to $49,999, more than 50% of people reported a median account balance of zero. This graph shows the median retirement account balance for employed workers has risen by only $1,450 in the last 10 years. And unfortunately, that's just not enough to retire with. And in this graph, we can clearly see that ESOPs significantly improve retirement savings outcomes for lower and middle income employees. Did you know you're building wealth right now? As long as you're working for one of IPS's companies, you are continuously building wealth towards your retirement. The harder you work towards the success of the company, the more can be contributed to your account. Since this is a retirement account, it will actually grow. This is how wealthy people build wealth. You can use your money to save, invest, or create a rainy day fund. Research shows that building financial security can have a positive impact on your health and well being. Learning about the ESOP can give you business literacy knowledge that most people aren't taught in school. This can help you in your financial planning. Researchers are pointing to these skills as critical to addressing wealth inequality. Now you may be asking, how do I participate in our ESOP plan? Well, all you have to do is be an employee for one full year, work 1,000 hours in that year, be at least 21 years old, and after your 1 year anniversary, you will be enrolled in the plan on January 1st or July 1st, whichever comes first. You begin to invest in your ESOP at your hire date. Each plan year, you work 1,000 hours or more and are employed on the last day of the year, you earn 1 year's vesting. 1 year of service equals 20% vested. 2 years of service equals 40% vested. 3 years of service equals 60% vested. 4 years of service equals 80% vested. And 5 years of service means you are 100% fully vested. This slide shows your annual ESOP statement. This is an example of what your ESOP statement will look like. The value of your ESOP retirement account is determined by the number of shares allocated to you and the value of each share. Here are a few key words that you should know in order to read your annual ESOP statement. Balance means the total value of your ESOP account. Vesting means how much of that value you own. Allocation means how many new shares you received this year. And diversification means your opportunity to sell shares and put the money in other investments. This graph shows that from December of 2013 to December of 2024, the IPS share value has grown by an annual rate of 25.2%, in which the same period, the Dow Jones Industrial Average has averaged an 8.7% growth rate. So as you can see, this graph is showing that the IPS share value has a higher annual growth rate. So now that you've learned all about how ESOPs work, you may be asking, how much of a difference does my ESOP account make in my retirement? Well, your ESOP account can make a big impact in your retirement. The following example is based on a real driver. Driver is 45 years old and has been employed with us since 2012. Since then, Driver has received 1,052 shares. These shares are worth $127.96 each. This gives Driver a total of $134,593. If Driver works for us until they're 65, they could earn another 2,060 shares. This would give Driver a total of 3,112 shares once they retire. If our share value grows at 3% per year, it would be worth $231.11 per share when Driver retires. This would make Driver's retirement balance $719,214. If our value grows faster than the assumed 3%, Driver's retirement balance could be, at 4%, $872,543. If it's at 5%, $1,056,586. If it grows at 6%, $1,277,134. Everything we've covered so far shows that the benefits you receive from participating in an ESOP are unique. But that's not the only thing. The way ESOPs are regulated are also unique. The Employee Retirement Income Security Act of 1974 and the companion provisions of the Internal Revenue Code provide compelling tax incentives for companies to become employee-owned, and in return, Congress wrote ERISA and the code to impose some requirements with teeth. ESOPs must follow federal law because the federal government provides tax benefits when ESOPs meet certain requirements. Congress set extensive requirements to ensure fairness. ESOPs are regulated by the Department of Labor and the Internal Revenue Service. So now, not only do you know all about how ESOPs work, but you also can see how they make such a big impact in your retirement. Thank you so much for helping make IPS a successful and profitable company. As employee owners, we all have the chance to reap the benefits of IPS's future success. If you have any questions, please feel free to reach out to hr@humanresources@ptl-inc.com or call Sherry Birch at 270-992-4156.